While it is true that prudent investments in cryptocurrencies have the potential to produce remarkably high returns in relatively short periods, it is equally critical to recognize the volatility of crypto trading. Finance Functionality features videos about financial intelligence, focusing on teaching individuals how to make major financial decisions. We want you to be empowered on how to invest and create wealth. Being financially literate generally enlightens us in various ways to support our money and generate more wealth. When most people think of investing, they envision stocks and bonds. They may also think about gold as a possible investment. The cryptocurrency market, on the other hand, is gradually becoming a more popular investment alternative. Cryptocurrencies have grown in popularity in recent years, with the market being valued at $2 trillion. This is mainly owing to their excellent profit potential and substantial price swings. However, there are critical mistakes to avoid while investing in Bitcoin to be successful and avoid being burned. Here are several blunders to avoid disastrous investments. Investing in an ICO without doing your research. Before investing in an initial coin offering, or ICO, it is critical to conduct as much research on the firm and its offering as possible. Reading their white paper, which usually lays out the business model for a coin, is a great place to start. It would be best if you also visited their website and social media sites like Medium and Telegram. If a corporation is not open about their operations, there is a significant possibility that they have something to conceal. Before engaging in an ICO, it is also critical to understand what you are investing in. It would help if you looked into cryptocurrency trading platforms and digital asset investment resources, which will supply you with all the knowledge you need to make an educated selection. Cryptocurrency trading platforms such as Coinbase and Bitfinex are also fantastic places to start for novices who want to get into cryptocurrency investment but don't know much about the sector or how it operates. These websites offer you a place to buy cryptocurrencies, which is usually safer than attempting to trade cryptocurrency with another person. Putting all your eggs in one basket. It's one of the most common blunders made by rookie investors. If you want to experiment with cryptocurrency, it is good to divide your investments over several diversification schemes. Putting all your money into one coin could destroy your riches and future investment plans. On the other hand, portfolio diversification is widely regarded as a time-tested method for reducing the chance of significant loss. Beginners frequently feel that every drop in coin price represents a buying opportunity. They also believe that buying during a bull run is a good strategy before the price rises too far. In these instances, investors face a substantial risk of capital loss. Therefore, before entering a significant position, it is critical to understand the reasons for each bull or bear run. Furthermore, employing leverage to play the cryptocurrency market should be extremely cautious and only if you are an expert. This is due to the high level of volatility that a growing digital store of value entails. In just a few hours, the digital coin market can make or lose hundreds of billions of dollars. The most recent price drop is a perfect example of the cryptocurrency market's volatility. Making emotionally driven trade decisions. Despite the risks connected with cryptocurrency trading decisions are usually made methodically after taking various market fundamentals, trends, and indications into account. Because of the buzz around cryptocurrencies, people are often tempted to break from their strategy and make emotionally motivated judgments due to the bandwagon effect, peer pressure, or other biases. People may even engage in panic selling if they notice an unexpectedly lousy trend in the market. While many people feel that deviating from their strategy and making decisions based on emotions will help them limit losses in a sinking market, this is inaccurate. Even if things do not go as planned, instead of making emotionally charged decisions, it is advisable to reassess the approach and prepare a contingency plan for unexpected events. Using cutting-edge trading tools and automation can assist you in reducing emotional biases in your trading technique. Buying high and selling low. This is the most common error, and it is the one that will most likely get you wrecked. Cryptocurrency is incredibly volatile, and significant gains come with considerable risk. Sure, timing the market precisely when buying and selling are nearly impossible, but there are some clear patterns you can follow to maximize your gains and minimize your losses. There are two significant errors that people frequently make. FOMO, fear of missing out, or just simply buying high. Let's face it, we've all been there. You observe a project's price increasing and you want a piece of the action. Even more so if you've previously passed up similar possibilities. You don't want to miss it again, so you dive right in. The issue is whatever goes up must come down. If you invest when a project is booming, you have a far higher probability of losing money because early investors will start taking their profits. You may have to wait a long time to break even, let alone make any money. Furthermore, when a project is pumping hard, it may be challenging to buy in, especially if you're trading on a decentralized exchange or DEX like Uniswap. You can lose a lot of money in Ethereum network gas fees, lose money due to increased slippage, or have stuck and unsuccessful transactions. FUD, fear, uncertainty, and doubt, or in other words, selling low. Few things are more disappointing than watching your investment sink further and further into the red. When a coin is fast losing value, it might be tempting to sell it to get rid of it. The problem is, if the project is solid and none of the fundamentals have altered, it has a decent chance of rebounding. Sure, it can be nerve-wracking at times, but the last thing you want to do is sell at a loss, only to watch the coin skyrocket a few days or weeks later. Remember that you only lose money if you sell. Else, it's just a number on the screen. Lack of proper security. Although it is not a fascinating topic, it is vital. First, remember that cryptocurrency is unregulated and the prospects of reclaiming your coins are little to none. On all social media sites, there are several phony profiles of crypto influencers. Be wary of scammers on YouTube, Twitter, Telegram, and other social media platforms. There are several fraudulent admin and tech support accounts, especially on Telegram. Typically, they offer ridiculously amazing freebies or conduct offers that claim to quadruple your cryptocurrency in minutes, etc. If they want you to pay them your cryptocurrency, flee. It may appear straightforward, yet many have lost a lot of money in this manner. Being your bank has drawbacks. Always keep your private key, password, and seed phrase safe. Never save them to a computer, phone, email, or keep them on the cloud. Instead, write them down and save them somewhere safe. Ideally, you should additionally save a copy in another secure location. Consider utilizing the Brave browser if you use MetaMask or a comparable software wallet. It has improved security and, as an added benefit, some intriguing features such as earning small amounts of cryptocurrency while surfing the web. Two-factor authentication, 2FA, is required on all exchanges and wallets that allow it. YubiKey is another excellent security tool. If you have a large quantity of cryptocurrency, consider investing in a hardware wallet like the Ledger or Treasure. Please keep in mind that you should only buy hardware wallets from the manufacturer's website and not from Amazon, eBay, or other third-party websites. Using inappropriate platform. Buying and selling cryptocurrency is heavily influenced by the platform you use to conduct transactions and monitor price trends. Therefore, it can be tough to observe and evaluate market movements if you do not use the correct Bitcoin trading platforms. It would deprive you of critical trading signals and information that might make or destroy your investment. As a result, people are frequently persuaded to use inappropriate platforms and make erroneous decisions. To trade cryptocurrencies like Bitcoin most effectively and efficiently, you should use a legitimate platform like BitcoinMastery.io. This platform provides excellent features that will undoubtedly assist you in studying the market and making the best decisions. Regardless of your level of education or expertise, Bitcoin Mastery offers the tools to enable anyone to engage in profitable cryptocurrency trading, not knowing the risks involved. Investing in cryptocurrencies is extremely dangerous and speculative, and it is possible to lose all of the funds invested. Furthermore, cryptocurrency marketplaces are highly unregulated, with numerous hazards, including fraud perpetrated by market makers or other sellers. Finally, there is significant complexity in tax reporting that makes it difficult to understand. Aside from that, Bitcoin has a low connection with other assets, which can benefit portfolios. Still, it also involves the danger that cryptocurrencies will not provide any diversification benefits. Because there are numerous trading platforms available, you should grasp their differences and account security before deciding on one, as some exchanges have been hacked. These typical blunders can cost beginner investors a lot of money in the long term and make it difficult to expand their portfolios over time. If you're new to investing or seeking fresh perspectives on how to manage your money effectively, this article is for you. The primary message from the video is to continually invest what you're willing to lose to reduce the danger of losing money. Also, instead of funding for the long term, avoid attempting to time the markets. Following these two criteria will make it easier for inexperienced investors to attain their financial goals over time while avoiding mistakes. Like, comment, subscribe, and we'll see you in the next one.